Okay, here we are. So we just finally figured it out that we're dealing with bad debt expense, right? This is the end of the given period and we're making an adjustment entry. So in this case, right, we know that we're going to be recognizing bad debt expense because here's a few factors that we know. We don't know who, we don't know when, and we don't know how much. This was a rough estimate that we had to calculate, right? So in this case, right, we calculated ourselves, right? We looked at the accounts receivable account and we look at the total balance and we calculated 5% of that to be $76.60. Okay, we journalized it. There's my conclusion. So I believe the next thing we have to do is go to the ledger. So we're going to go all the way down till we find bad debt expense. Right. Here we have it, bad debt expense.
All right. So I'm going 630. I wrote a 5% write-off. Or what would be the proper to put out end of month evaluation?
You can just say 5%. Go ahead.
Yeah, I was just gonna say, I just put the same note as I did in my general journal.
Yep, that's what I was going to say. 5% of accounts receivable.
General Journal 21.
22.
Oh, 22. Thank you. For the 7660 debit and brings our debit to 7660.
Go ahead.
Now back to our assets on our ledger. Doubtful accounts. 3630. 5% accounts receivable. We'll write off accounts receivable. General Journal 22. Credit for 7060. Sorry, total credit to 7060.
All right, good. That's the end of this one. So once again, since I see that I had like 3 lines extra, I'm going to go ahead and draw a line there just to prevent anybody else from squeezing something in there, like a check to themselves. Okay. And we are done with the general journal number 22. So fresh new journal 23. Right? What else has happened next?
Looks like we're going to get depreciation mode, so we're going to depreciate the truck.
All right. So as I mentioned in there, we will be using the depreciation table. So take those out. All right. So here's my depreciation tables. I have one for every single asset that exists in the book, or I'm sorry, in our chart of accounts. So in this case, right, let me find my truck here. Here it is, my truck. All right, let's piece together the information that we know so far. What does it say here?
We're calculating the first month depreciation on the truck.
Okay.
The mouse is 150,000 before it needs maintenance, which is outrageous, but that's okay. No salvage value or useful life. The useful life is 7 years. This month we drove it with 1,200 miles, and I'm guessing we got it brand new, so the starting miles is going to be 0.
Good. Yes.
And that's all the information I have on the paper.
Okay, so let's see what we do know, right? The truck, that's what we have. What depreciation method are we doing?
Could we
Units produced.
Units produced, units of production. Excellent, right? Because we have a criteria, right? We're given that the capacity of the truck can drive up to 150,000 miles before it needs to be maintenance. Okay? And we're also given that this month of June, we drove it for a total of 1,200 miles. All right? So units of production, okay? Actually, I'm gonna do what do you call it? Acronyms. So ULP for units of production. Okay. All right. We know the capacity, right, of it could drive up to 150,000 miles. All right. We know that there is no salvage value, right? And we know that's right. We don't care for how many years it lasts because it can last you for more than 7 years. So in this case, my assumption is, when did I place into service, right? We can figure that out at the same time we figure out how much our asset cost. Now, where can we find where my total truck costs?
subledger,
Not subledger.
the regular ledger?
The regular ledger, yes. All right, where do we go?
All right, look for it right now. Oh, truck.
Yes, we go to the truck. We go to our asset itself. So here we are, truck. How much is my truck, or how much did my truck cost? Excuse me.
Everything included, $32,208.90.
Okay, so good. That is where I'm going to put for my asset cost. It is 32,208.90. Right? Now, question to you. When did I place it into service?
After 1 month?
All right. And in real life context, when do you actually start depreciating it?
Oh, well, once you drive it off the lot.
Once you drive it off the lot. So the minute you purchase that car and you drive it off the lot, you immediately depreciate it. So in this case, when did I actually purchase this item?
The 8th of June.
Correct, the 8th of June. So therefore, when do I start depreciating it?
The 1st of June.
The 1st of June. So in this case, do we need to calculate the depreciation for the month of June? Absolutely. Right? Because we placed it into service on June 8th, or in this case, we purchased the asset on June 8th, and we drove it off the parking lot. So we assume that we're going to take it off. So month is going to be for the month of June. All right. Now, how many miles did I say I drove for the month of June?
1,200.
We drove a total of 1,200 miles. Okay? So, let's do some review here. What is the formula for the depreciation basis for units of production?
Oh, I got that. All right. This is for products, right? For production.
Units of production.
Okay. I have it in Themes, but I do not have the formula. It is. Why is it not have the formula? It's going to be 40%. No, it's 20%.
No.
Right on that amount. All right.
How do I solve for my depreciation basis?
12 divided by 7, or 7 divided by 12?
Not in this context, no. Depreciation basis. Did you find it, Felipe?
I'm still looking and I'm trying to like dig my brain. I'm thinking of the rate that depreciates, which I'm wrong right now because we're going to depreciate basis. I know it's going to go off the regular price, the purchase price we got, and then I
Okay.
go blank.
The purchase. Okay, good. That's okay. That's a good start. So here, for units of production, the depreciation basis is going to be your asset cost minus your salvage value, right? To give you your overall amount that you can depreciate the asset for. So in this case, what is 32,209.90 minus 0?
32,890.
Good. So that means that's how much I can depreciate this asset for the total amount of $32,208 and $90. 90 cents. Okay. So in this case, right, how would I calculate my depreciation rate? Or in this case, because we're using units of production, we need to calculate a per unit rate.
Divide the 32,208.90 by 1,200.
Okay, not that number, not the numbers, not the miles that you used, but by what number?
If I 150,000
Correct.
divided by the years,
No.
or okay. I'm still
So
looking for my notes. Where's my notes?
so Melinda was on the right track, right? We're taking my 32,290 and we're going to divide the whole thing by the total number of units that the machine can produce. In this case, I'm using a truck. So I'm going to take my 32,290 208.90 and I'm going to divide the whole amount by the total capacity of miles that it can drive. So that means every mile that I drive, it's going to cost me X amount of dollars. So in this case, let's go ahead and calculate it. What is 32,208.90 divided by the 150,000 miles?
0.21.
Okay? That means every mile that I drive, it's going to cost me 21.47 cents. Okay? So roughly about 21.5 cents for every mile I drive is how much I'm going to depreciate it. So in this case, what is going to be my depreciation expense for the month of June?
It's going to be the 0.2174 times the 1,200 miles you drove.
Correct. So in this case, right, because it's 21 and almost a half, right, I'm going to use my equal round formula because I need to depreciate to a rounded number, to the nearest penny. So in this case, I am going to say, well, this is how much I drove. This is how much I used. So if it's going to cost me 21 cents for every mile I drive, and therefore I drove a total of 1,200 miles for the month of June, therefore I'm going to take 1,200, multiply it by my 21.47 cents,
260.88.
comma 2 to get what 2. Okay, I did not get that. Did you round the number too short?
No, you got it right. 257.67.
Oh no, but she got 250. She got 2 something else. Okay. All right, so there we have it, right? That's the depreciation expense I have for the month of June. Okay,
You took it times 0.2147.
correct. Because that's going to cost me per mile that I drive. That's how much it's going to cost me.
Why am I coming up with a different amount?
Did you type in 2147? Because if you did or punched this in your calculator, you've already rounded the number. I extended it out and it's 2147,260. So it goes on beyond that. So try calculating that now. The 2147260 times the 1200 and see if you get a little more closer answer.
I keep getting 6,915. I don't know. Oh, yeah, I'm taking the 32,000 times.
Okay.
Yeah, we're supposed to, right?
No, not the 32.
1,200.
It's the 1200, correct? Because we're looking at how many miles we drove for the month of June.
Okay, now I have it, yeah.
Okay. All right, good. So because this is the first month of depreciation, right? Our accumulated is going to be the same. So therefore, what should my book value be?
31,951.23.
Correct. Okay. Now, what I'm going to have you guys do is when we're going to do this and journalize it, I'm going to journalize it as one complete journal entry because at the end of the day, right, they're all going to go to one specific account. So I don't want you to draw out, I'm not going to have you do depreciation expense and accumulated depreciation for the truck. And then again, second journal is going to be depreciation expense accumulated for this, whatever item that you have. I want you to just make a list of every single item you have because all of it's going to go straight to depreciation expense. So in this case, right, let's hold off on the journal and let's go through every single depreciation in the tables. And then when we calculate all of that, then we bring together our journal and compute our journal from there, okay? So that was the depreciation for the truck, right? So now let's go ahead and take a look at the next scenario here.
Could I see the depreciation of the truck for 1 second?
Yeah, go ahead.
Thank you.
So I don't need to equal around the depreciation rate, or do I?
The rate, no, you leave it. Ellen, do you need any formulas or anything?
No, I did this before and everything. I don't know why one of my columns was missing. I mean, I had all the math, but I just need just 1 more minute and I'm done.
Okay.
Okay, I'm good. I can fix the rest of it later. Thank you.
Oh, no worries. Okay. So now that we completed our very first depreciation here, let's see what the next depreciation is.
Coffee brewers.
All right. So we have 2 coffee brewers, right? So for the first coffee brewer, right, it only has a remaining useful life of 3 years, right? Because we bought it off of someone else who was a previous coffee owner. So we bought it secondhand. It's already been used, all right? So that means it's only got 3 years left to it, okay? And no salvage value. However, our second coffee brewer has a total of 5 years to it, but no salvage value. So in this case, which method are we going to be using to depreciate our coffee brewers? Okay. What depreciation method am I going to be using to depreciate my coffee brewers?
Straight line.
Straight line. So SL for both, okay? Now, what do we know about the useful life of the first coffee brewer?
That's 3 years.
3 years, good. Does it have a salvage value?
No.
No. Right? What about the second coffee brewer? What's the useful life on that one?
5 years.
It has 5 years. Does it have a salvage value?
No.
No, it doesn't have a salvage value here. All right. So let's go ahead and take a look at where we can find our actual cost for each coffee brewer. So we got to go to the ledger, right? And let's go up to my equipment. Here we have it. Coffee brewers. How much did my first coffee brewer cost me?
1900.
It cost me $1,900. Now, when did I actually place it into service?
It wasn't until we got the electricity hooked up.
Okay, so that's the coffee grinder.
Oh. It'll be on the first day of grand opening.
Yes, but technically you also want to make sure that when you purchased it, right?
Oh, the day you got it then?
Yes, right. You want to make sure it works. Okay, so in this case, when was what day did I actually purchase my first coffee brewer?
June 4th.
June 4th. So therefore, when am I going to depreciate it? Right, we're going to depreciate it for the month of June. Okay. We're going to do it as the month of the 1st of June. Right? What about my second coffee brewer? How much did I purchase it for?
$2,627.95.
Correct. So $26, $27.95. Okay. 26, $27.95. Wait, but that's what I originally purchased it for, right? I also took a discount off of it. So actually, what was my actual true amount that I actually purchased my coffee brewer for? Right? If you need to, you can go ahead and go onto the side over here.
It'll be $26.50.61.
26, let's see. 20, what did you get?
$26.50.61.
20,
Don't we just add the 1%?
we don't add, right? It's a discount. So we subtract it out.
We'll subtract it.
Yes. So what is our total asset for the second coffee brewer.
260529.
260509.
29.
260529. 29.
Yes.
Good. Okay. So now, when did I place into service?
June 10th.
June 10th.
Yeah, June 10th.
Yes, because the discount doesn't matter because we already have the product, right? The discount is because we paid for it. But however, with the minute that we received it, we obviously had to plug into the wall to make sure it worked. So in this case, we placed into service as of June 10th because we opened up shop on the 17th, right? We have to practice making coffee. We can't just start making coffee on the very first day, right? No, a lot of things will happen that day. So your best bet is you've already turned on the coffee brewer and you attempted to make your recipe. Okay, so in this case, you started on June 10th. So if I placed it into service on June 10th, therefore, when do I actually depreciate it?
On June 10th. On June 30th.
Well, in this case, we're depreciating it on June 30th, yes, but in context, right? When did I start depreciating? Am I going to depreciate for as of the month of June, or am I going to start as the month of July?
June.
June, because we fall within the first 15 days of the month. So in this case, I used it for a majority of the month. Okay, so let's go ahead and do one calculation. Let's do the first one first for the first coffee brewer, right? Let's go ahead and solve it first, and then we'll solve the second coffee brewer afterwards. So in this case, what is going to be my depreciation basis for straight line?
The 1900.
Good. Okay, the 1900, right? It's going to what's the formula?
Cost of assets minus salvage.
Right. So you're so good. So that means, right, 1900 minus 0 is going to give you 1900. Now, what is going to be my rate?
$1,900 divided by the 3 years, which is 36 months.
No.
Okay.
But the estimated useful life is correct.
Is it 1,900 divided by 36 months?
No.
Divided by 12 months.
No. So the formula for depreciation rate is 1
1 divided by 36.
not 36.
3 years.
3 years. Good.
I'm lost.
Okay.
I know we went over this like chapter 11 or something.
Yes, this is on the exam. Okay, so make sure you guys know this. Okay, so once again, if you use your cheat sheet, the formula for straight line is going to be 1 over the estimated useful life. So in this case, 1 over 3.
0.33333.
Exactly. So then, what is going to be my depreciation expense?
$633.27.
How did you get that?
I took the 1900 times the 0.3333.
Okay, so 633.33. Now, is that value for the whole year or is that for the month?
Shouldn't that be for the month? Because, well, it doesn't seem right. Because it's depreciation times the rate, correct?
Mm-hmm.
Okay, I'm lost.
Now tell me, if I depreciate this every single month, $633.33,
Divided by 12?
I have to divide this by 12 because this is an annual rate. So therefore, this is an annual amount of expense. So think about it, right? If I'm supposed to have this for 3 years and I depreciate $633 every single month, I'm going to be way over my cost of the asset. So in this case, right, we're going to divide it evenly amongst the months because I'm looking at not what it is for the year. I'm looking for what it's going to cost me every single month to depreciate. So in this case, I'm going to take my 633.33 and I'm going to divide it by 12. Now in this case, I'm going to go ahead and throw my equal round to be consistent. I'm going to take my 1900, multiply it by my 0.333, and divide the whole thing by 12. All right? So how much depreciation am I going to incur for the first month of my first coffee brewer?
5278.
5278. So once again, that will be that. And therefore, what should be my total book value for the first year?
One eight four seven two two.
Okay, good. So let's go ahead and now that's our very first one right here, right? That's how we calculate the depreciation for 1 month for straight line. Okay, because in this case, right, this is an annual rate. This is how much you're going to calculate per year. I don't want per year, I want per month. So you do need to divide it by an extra 12 months so that you can get you can calculate the amount every single month to be $52.78.
How'd you get the 1847.22?
We took the asset cost of 1900, right? And we subtracted out the accumulated depreciation. So your book value, right,
Yeah.
should reflect because you used $52 worth of it already, that it should reflect as 1847.27 in your books. Okay? All right. So let's go ahead and I'm going to call break here since it's already 3:20. All right. So again, 10-minute break. So please be back no later than 3:30.